This is a 5-minute farm doc recapping the Friday, June 10th USDA World Agricultural Supply and Demand Estimates. I'm Joe Jansen. I'll discuss changes in the report to U.S. commodity balance sheets for corn, soybeans, and wheat, and one thing to watch going forward, the U.S. season average price forecasts included in the WASDE. The June report contained relatively minor adjustments to estimated U.S. and world production, consumption, and exports for corn, soybeans, and wheat. The market reaction to the report was pretty muted. On Friday, new crop futures prices were up 4 cents for corn, down 14 for soybeans, and down 1 for soft red winter wheat. This price reaction reflects limited information available in the report and elsewhere about the size of the U.S. crop, particularly for soybeans and corn, as the late 2022 planting season's just now wrapping up. Markets will closely follow weather conditions and crop progress over the coming months and reassess planted acreage estimates around the upcoming release of the USDA-NASS Acreage report on June the 30th. Broadly, the overall supply and demand situation remains tight, especially for corn and soybeans. Estimated stocks-to-use ratios at the end of the 2021-22 marketing year sit at 10% for corn. This is a historically low level that has resulted in elevated price volatility. Corn ending stocks-to-use have been below 10% in the United States in only 6 years since 1990. Production estimates remain largely the same from last month. Corn and soybean acreage and yield are unchanged in the June report. USDA stuck with its slightly below trend yield estimate for corn of 177 bushels per acre. There was a small change on the usage side. While most usage categories were unchanged, old crop exports were adjusted lower for corn by about 50 million bushels, leading to a similar increase in ending stocks. On the soybean side, the soybean supply and demand situation remains extremely tight. Estimated old crop ending stocks are about 4.6% for soybeans. U.S. soybean ending stocks to use has been below 5% in only 5 years since 1990. Soybean production estimates remain the same as in the May report. Soybean exports did increase by 30 million bushels relative to May. That change resulted in a similarly modest adjustment in ending stocks lower, which does tighten the supply and demand balance for soybeans just slightly. On the wheat side, wheat acreage is unchanged and projected yields about 0.3 bushels per acre higher, so a slight increase in U.S. production for the coming 22-23 marketing year. The report did not include strong reactions to drought conditions in the southern Great Plains and excess moisture in the Dakotas and Minnesota. The WASDE report also contains updated forecasts of the season average price received by U.S. farmers for corn, soybeans, and wheat and other commodities. In the balance sheet given here, and as can be seen in the report, the season average price for 21-22 for wheat is estimated to be $7.70 a bushel. For the coming marketing year, 22-23, the season average wheat price is $10.75 a bushel. This average farm price is a marketing year average of the prices received by U.S. farmers across the country. Observed and forecast spot market prices for different times of the year get different weights in calculating this average, with the weights depending on the previous 5-year average proportion of farm output sold at that time of year. So typically, the marketing weights are highest immediately following harvest and smaller at other times of the year. While these forecasts play some role in informing price expectations, an important, well-defined function of the season average price is serving as a benchmark for Title I commodity programs under the 2014 and 2018 Farm Bills. Farm program payments under the price loss coverage and agricultural risk coverage programs are based in whole or in part on the difference between the actual season average price and levels defined by the program. In the June WASDE report, USDA increased its 21-22 season average price for corn to the level seen on the graph here of $5.95 per bushel and left its estimated new crop average corn price at $6.75 a bushel. These small changes are typical. Month-to-month changes in season average prices are often small relative to the day-to-day changes in cash and futures prices because the season average price represents an average across the whole year. As seen on the graph for 2020 and 2021 crops, a typical seasonal price pattern results in the season average price being a combination of lower harvest time prices and higher prices later in the marketing year. The June WASDE report did also increase the 21-22 season average price for soybeans by about 10 cents to $13.35 per bushel, as seen on the graph. New crop soybean average price forecasts were 30 cents higher at $14.70 per bushel. the level seen just on the right edge of the graph here. The graph also shows past and current season average prices relative to the underlying spot price for soybeans. Current 21-22 and 22-23 season average price forecasts indicate that prices are relatively high compared to previous years and relative to the policy support levels defined by the PLC reference price. Farm program payments based on the season average price then are pretty unlikely in the 22-23 marketing year. For wheat, USDA left the season average price forecasts unchanged in the June report. Comparing historical season average prices to spot prices, as I've done in these graphs, shows that the season average price often masks considerable intra-year volatility in prices. Prices can be well above and well below the prevailing season average price. Prices can fall and increase during the period around a given season average price. Though the June WASDE report contained limited news about agricultural commodity supply and demand, it highlighted continued tightness in U.S. supply and demand situation for corn and soybeans especially. Low inventories indicate the potential for future price volatility, including price reactions to future supply and demand news such as the pending update to acreage estimates on June 30th. Low inventories mean high prices, including season average price forecasts contained in the WASDE. For more information, click on the description below. I'm Joe Jansen. This has been a 5-Minute Farm Doc.